Hi, I'm Mike Capizzola, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at an industrial heavyweight that employs around 180,000 people across 4 business divisions, with annual sales in the order of $77 billion. That company is Raytheon Technologies, which is perhaps best known as a defense contractor that also operates in commercial aerospace markets in areas such as air traffic control, air filtration, and contactless transit at airports. The company has been in the space race for decades, building the computer that guided Apollo 11 to the surface of the moon. Today, it's involved with satellite imagery and data collection. Its defense division participates in major weapons projects like the F-35 jet fighter, battlefield communications, and integrated missile defense systems. Raytheon Technologies trades under the ticker RTX, and the shares are positively rated on Wall Street, with 11 buy recommendations and 1 strong buy among the 17 analysts that research the company. The analysts' consensus price target for the stock is $86, some 50% above the current market price. Of course, aerospace markets have been among the hardest hit of all industries affected by COVID-19, with air travel for leisure or business almost grinding to a halt since March. The downturn has dramatically impacted sales and revenues at Raytheon businesses such as Pratt & Whitney and Collins Aerospace. Third quarter 2020 sales at Collins Aerospace were down 34% year over year, and operating profits dropped by 94%. At Pratt & Whitney, Q3 sales fell 28% and operating profits by 108%, though it's interesting to note that sales to the military in this division rose by 11%. In fact, the defense businesses within the wider company have continued to perform, buoyed by an order book backlog worth almost $50 billion, made up of outstanding orders to both domestic and international customers. In the last week, Raytheon reported some rather interesting insider purchases. None other than CEO Gregory Hayes has been buying the company's shares. Mr. Hayes is well known on Wall Street. He's a graduate of Cornell University and the Krannert School of Management, and he rose through the ranks of United Technologies to become CEO of the company. When United Tech merged with Raytheon, he was named CEO of the combined businesses, with Raytheon's then CEO, Thomas Kennedy, assuming the role of chairman. Following Q3 2020 earnings that were released on the 27th of October, Mr. Hayes purchased 55,000 shares of Raytheon stock at $54.82. That purchase represented an investment of just over $3 million and took his total holding to over 255,000 shares. Mr. Hayes' stock purchase was reported to the SEC on the 30th of October, and since then, Raytheon stock has been ticking higher, adding almost 7.5% since the report was lodged. Raytheon is one of a slew of aerospace businesses that stands to benefit from a return to economic normality, as well as the introduction of a viable and widely available vaccine. For now, that upside potential is underpinned by the defense contracting portions of the business. We have to assume that Mr. Hayes believes that the stock is currently undervalued, sitting some 40% below its year-to-date and 52-week highs, and that this valuation gap will be closed in the months ahead. Well, that's all the time we have for this week, but please remember to always do your own due diligence before making any investment decisions.